quick video on gold to discuss the short setup this morning in the Asia session. Okay, best time, or my favorite time I should say, to trade Asia is at that 9:30 p.m. Okay, reminder that the Asia session starts from 8 p.m. and goes for 3 hours, so it ends at 11 p.m. That second hour is the most important, and that's not just for the Asia session, for any session. Okay, now if I'm looking for the market to move down, I want to see a pump up before the market moves down, and we can see that pump up. These three up candles is that 45-minute pump up for the dump. I want to walk through this very quickly for the setup. Okay, now this is 9 p.m. Okay, right there, 9 p.m. takes out high of the day. High of the day, low of the day, high of the week, low of the week. They are the very key times to look for your setup. They are the most high probable because that's when other time frame traders get triggered into the market. As soon as we breach the high of the day, which is that level there, with this move up at a key time, like 9 p.m., which is the second hour of the Asia session, that triggers breakout traders into the market, okay, who are now trapped, right? This has moved down over 100 pips. Anyone that's traded that, triggered with this little breakout above the daily high, has been triggered long, and they are now underwater. Okay, they're trapped long up here, and the market's moved down over 100 pips. Okay, now your entry can be, okay, above these, above this daily high after you see this pump up, 45-minute pump up at the new hour. Okay, on a shorter time frame, you will see that this candle moves up and then starts to roll over on a 1 minute chart. Okay, so if I switch over to a 1 minute chart and we look at that particular candle forming, okay, where are we? Let's try and find this. Here we go. So this setup is way up here somewhere. Let's find that particular candle that starts at 8:45, the 15-minute candle. Okay, so there we go. And you'll see it's going up. And towards the end of that candle, we start to see that it's turned around. Okay, after halfway into that 15-minute candle, it's turned around. What that does, that leaves a wick. Okay, and that's what we see. We see a wick right here as it's taking that liquidity. Okay, now you could have expected a repricing lower as soon as that 9 p.m. candle has started to turn around, okay, after taking out these highs, or at 9:30, right? There is the 9:30 candle. So again, I like 9:30 p.m. That's my favorite time because that is the 30 minutes into the second hour of the session, okay? Now, you're breaking structure on a lower time frame with this little pin that breaks these lows, okay? Then you're basically pushing back up, okay? And so even on this time frame, that's basically pushing up into these order blocks, okay? These three up candles and this bearish breaker with this little candle moving up after taking out these lows. But on a shorter time frame, that can be more clear. Like if we jump down to a 5 minute, then we can see that a little bit more clearly. Okay, so here we can see we've got that pump up. Okay, here we're moving down. That's the swing low that created that high. Okay, those two down candles. Okay, that is the swing low that's created this high. And so once we go through there with displacement, with gaps, okay, that's the break of the market structure. We've closed. Look at that body candle closes below this swing low, below this swing low. Okay, so as this is now moving up, it's moving up into this fair value gap. Okay, and these up candles, as well as these two down candles as well. Okay, that's what you need to look at. Okay, you got to study the charts. So 9:30, okay, or 9 p.m. second hour. I love the 9:30, right? That 30 minutes into the second hour of the session. Okay, or the new hour. Okay, which here is 9 p.m. because the session starts at 8 p.m. Notice that here we start to dump down. What time is that? That's at 7 p.m. Okay, this market's dumping down, dumping down, dumping down. Okay, probably getting people short on this little move down. Notice it's a chop, 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 pump up, takes out half the day, straight down, breaking structure, then the pullback into the key bearish signatures. Then it's up to you where you want to target. Okay, you can target under these lows, okay, and then you just got to find where, where's liquidity. Okay, liquidity could be under these lows, okay, maybe into this gap. So finding the exit's easy, right? Because then you can just look at where has it pumped up from, maybe that low, maybe that low, maybe this gap, okay, and just understand where is liquidity, what is this reaching for, okay, maybe down at these equal lows, okay? So I hope the video is useful. You've got to go and study these charts, right? Every time I do a video, every time I journal or trade on my Twitter profile, you need to go back and look at what I've said on the video and study this. These are repeating patterns that I talk about almost every single day, almost every single session, and I trade this. I didn't trade this one short, okay? But I'm looking for setups like these all the time, okay? Hope the video is useful. I want to talk with you in a future video.